Hello guys, welcome to today's class. Um, in today's class, we are going to start the main thing in forex trading, which is candlestick analysis. We are going to start candlestick analysis now. We know that every um, every human being has a mode of communication. We have languages which we use to communicate for us to better understand and communicate. So now in forex, we have what we call candles. These things here are called candles. This sorry, these things here are called candles. All these things you're seeing here, they are called candles, right? This one, all these things, this red and green, they are called candles. So now, what it means is that all these candles you are seeing, each of them have a name. They have what they represent. They have a message they are telling you. Depending on where you find them, they have what they're trying to tell you. So it is very, very important that you understand what the market is saying. You get, so all these candles you are seeing, each and every one of them on this chart has a name, has a function, with respect to either the bull or the bear market, with respect to the uptrend or downtrend, with respect to whether you should buy or whether you should sell or whether you should wait. So each of them has what they are telling you, and that is what I'm going to be explaining in this topic, candlestick analysis. So just relax and follow me gradually as I explain for you, stage by stage, brief by brief. So now, first thing you need to understand is that there are three types of graphs um, on your trading app. Three types of graphs. So now, this one that you are seeing now is called candlestick, right? Candlestick graph. So everything you are seeing is represented by these candlesticks. For instance, represented by candlesticks, we have what we call line chart. All you just need to do is to click on touch the screen. It brings this to you. You go to settings, right? Then when you go to settings, you see type of candle. You click on it. Then if you change it to bar chart now and you go back, you notice that everything now is in bar. This is what we call bar chart, right? Bar chart. If you click on it again, it's bar chart, right? If you click on touch the screen again and go back to settings and you click on line, this is what we call line chart. Everything here is in line. Now, this line chart, it will be important when we reach the stage of support and resistance. When we are trying to connect 2 points, two support and resistance. For support and resistance, you understand, demand and supply, those areas. That's what we are going to make use of a line chart. So the two main kinds of charts we're going to be making use of is mainly mainly candlestick, right? Candlestick chart, stick chart, and line chart, right? So um, these are the two main types. These are the three main types of charts we're going to be making use of. Two only. You understand? Yeah. So I'll explain them gradually. Okay. Now, in every candle, we have what we call the low, we have what we call the high, we have what we call the open, we have what we call the close, we have what we call the candle body. The candle body. Now, depending on whether it is a bullish or a bearish candle, bullish candles are candles that are green in color, but some charts you see them as white, white candles. You understand? While bearish candles are candles that are red in color, right? And in some charts you see them as black. You understand? Black. So you just need to understand black, black candles. That's just it. So remember, bullish candles green or most times white. Bearish candles are red or most times black. But you can customize the colors of these candles to any color of your choice depending on what type of color you want. But these ones I just told you about are the main types of colors that are used, or the default colors that come with the chart. You understand? So now, like I said, we have what we call the low, the high. For a bullish candle, the low is usually down, the high is usually up, the open is usually around this region, right? The open is around this region, the close is around this region. Then we have the candle body. The candle body is this full size, this size that this green we are seeing. Then for the bearish candle, the low is usually down, the high is up, the close is down, open is up. Reason being, now let me explain why it's like this. Let's say we are in a bullish market now. Bullish, what does bullish means? It means that the market is buying up. It means that the candle will form from down. The candle will form from down to up, since it is buying, right? To form from down to up. What it means is that the low will be down, the open of the price, since this is where the full candle body starts, will be around this down. Where the candle body closes will be around this region. The high will be up because that represents the highest price the candle touched at that session. You understand? Why for the low, for bearish candle, since we are selling, I know if we are selling, price is going down. What does it mean? That the candle will form from up, right? Candle form from up to down. What it means is that the open of the candle will be around this region, the close will be around this region, the high will be around this region, the low will be around this region. Since we are going from up to down, remember, selling, you are going down, the price is going down. You understand? Now when I talked about session, if you open your MetaTrader app, let's switch this thing back to Candlestick Chart. So now I have Candlestick Chart. Now when you touch your screen, you will see different times. We call these time frames. We have M1, M5, have M1, M5, M15, M30, H1, H4, D1, W1, MN. Now what this thing represents is that M1 means 1 minute time frame, M5 means 5 minutes time frame, M15 means 15 minutes time frame, M30 represents 30 minutes time frame, H1 represents 1 hour time frame, H4 represents 4 hours time frame, D1 represents daily time frame, W1 represents weekly time frame, and MN represents monthly time frame. Now what does this mean? What it means is that if I click on M1, it means that for every in this M1, that is a 1 minute time frame, each candle forms and completes in 1 minute. In this time frame, every candle forms in 1 minute. So if you have to wait a little bit, you notice that this one that is currently forming here will soon close. You see, it will soon close because this is 1 minute time frame. So it takes each candle in the 1 minute time frame 1 minute to form. Either whether it's a bullish candle or a bearish candle, it will form completely in 1 minute. That's just what it means by M1. You understand? So let's just wait a little bit so that we can. Okay, see now it has finished. Another candle still forming, 1 minute time frame. If you go to M5, then what it means is that it takes a candle 5 minutes to form in this time frame. So every candle in 5 minutes time frame forms in 5 minutes. You understand? If you go to M15, the same thing. Each candle in the 15 minutes time frame forms in 15 minutes. Whether it's a bullish or bearish candle, if each candle here forms in 15 minutes. You understand? If you go to M30, each candle forms in 30 minutes. So in this time frame, it takes each candle 30 minutes to form. If you go to H1, which is 1 hour time frame, it takes each candle 1 hour to form. You understand? H4, it takes each candle forms in 4 hours. So before a candle forms fully, it will take 4 hours. You understand? If you go to D1, it's at every single day, at 24 hours, one candle forms fully in this daily time frame. So before you can see another new candle, you have to wait for 24 hours on this time frame. Then if you go to W1, what it means is that each candle here forms in 1 week. That is in 7 days time, a candle will form completely. So all these candles you are seeing here took seven days to form each. All those candles you are seeing here. So it takes 7 days for a candle to form on the blue one time frame. Why on the monthly time frame, it takes a full month. That's a full month for a candle to form on the monthly time frame. You understand? So that's just how this time frame analysis is. With time, I will teach you what we call types of traders, so that with the types of traders, the type of times they trade. There are some people that trade 1 minute, 5 minutes, 15 minutes, 30 minutes. And if a trader trades those kind of short time, what it means is that he won't spend a lot of time on the market. He will enter, and before you know it, he comes out, because it doesn't take much time for the candles to complete or to form completely, because of the type of time frame it trades on. And there are some people that trade daily time frame. They do analysis on this time frame, and it takes sometimes 2 to 3 days for their candles to form, or for their analysis to complete, or for their trade to enter. So with time I will explain further, but let me just do a small recap. We have scalpers, we have what we call scalpers, people that enter sharp sharp, that trade uh, the lower time frames, 1 minute, 5 minutes, 15 minutes, 30 minutes. We have intraday traders, that's what I trade daily time frame. We have day traders, day traders, we have day traders, we have swing traders. You understand? So with time, I'll explain better what all this is and how to maximize them for your benefit. You understand? So if you notice here, if this 1 hour time frame, the candle has formed finish, and that candle is already in the process of forming. You understand? Okay. Now, when you see a bullish candle, what it means is that the bulls, the buyers, are in control. When you see a bearish candle, what it means is that the sellers are in control. You understand? The bears. You understand? So that's just it. And let me just give a brief history of candlestick analysis. It said candlestick analysis was initially used by ancient Japanese to study the price of cereals. Traders who deal in agricultural products use it to monitor and make market decisions. And it was later in the 21st century that a forex trader known as Steve Nissen copied the idea from his Japanese friend and developed it into what we see today. So originally, forex trading started from, or trading using Japanese candlesticks started from the Japanese. It's just Steve Nissen that copied the idea from his friend um, and integrated into forex trading, that financial markets. So, like I said before, a candlestick is composed of the open, the high, the low, the close. You understand? Then the full candle body, everything is called shadow. You understand? So that's just um, I'm all about the structure of a candlestick. Now, this let me just go forward. You understand better. Now, this see the full body, this green part, then this slim part you are seeing here, we call it wick. Just the way our candles are, it's very similar. You know, there's the main candle where you have the wax, then that rope inside, we call it wick. But and in forex trading, we call that long line there you see there, we call it wick. You understand? Yeah. So like I said before, some candles are for bullish candles, some are white. It can either be represented as white or red. While for bearish, as a bearish market, when the bears are in control, it can either be represented as black or red. You understand? So let's move on. Now, there are several kinds of candles. There are different kinds of candles, and we're going to be handling them one by one. We have the Haramis. We have the Haramis candlestick, the Haramis, we have the Moribozu, we have the spinning top, we have the hammer, we have the inverted hammer, we have the shooting star, we have the hanging man, we have the doji. You understand? So these are different kinds of candles. So all these candles you are seeing here, all the names are just those funny names I just mentioned. That is the names of most of them here, but I'm going to be explaining one by one which one is which one, so you understand better.